Yeah, it's
Okay,
recording now. It should be. Yeah.
great. Okay, excellent. Thanks. Welcome, everyone. Thanks very much for attending. I'm Michael Dalto with Griffin-Hammis Associates, and I'll tell you a story. Some years back, I started a low-interest loan program for people with disabilities to be able to buy assistive technology. And the man who answered most of the inquiries for the program is a guy named Tony. And one day, Tony got a call from a woman who announced, I have bipolar disorder and I want to know if I can get a loan to buy a new couch. And Tony said, well, I don't think so, ma'am. I mean, this program provides loans for people to buy technology they need because of their disabilities. But being the kind and patient soul that he is, Tony asked her, but I mean, is there any way that you can justify your need for a new couch in terms of your disability? And the woman said, I sure can. Every time I look at the old one, I get depressed. And I love people who can take what many would consider to be a liability and turn it into an asset. Now, the economic havoc that this pandemic has wrought is an enormous liability, but people we work with and many people actually with and without disabilities do have some resources that can provide some relief economically during the pandemic. And that's the topic of our presentation today. So we're ready for the next slide. So what happens when a worker loses their job or most or all of their business income as a result of the pandemic? Well, they can get unemployment benefits. We'll be talking a fair amount about those because legislation regarding unemployment benefits at the federal level has substantially increased the availability of unemployment benefits and made unemployment available to more people who ordinarily wouldn't qualify for unemployment. People can get their SSDI or SSI benefits restarted in many cases if they had previously worked their way off those benefits. And if people hadn't previously been receiving SSDI or SSI and now they're not working or their earnings have greatly dropped, they can apply for SSDI or SSI. Next slide, please. So we'll take most of our time, I think, talking about unemployment benefits. Unemployment benefits in general are to help out people who have lost employment through no fault of their own. And certainly there are many millions of people in the country right now who've lost work as a result of the pandemic through no fault of their own. Unemployment benefits are temporary. They're only designed to tide you over until you're back to work. And they don't provide full compensation or replacement of your lost work income. They only provide partial replacement. For example, I live in Maryland, and regular Maryland unemployment benefits reimburse a person for up to about half of their take-home pay. So it's helping out, but not fully replacing lost income. To qualify for unemployment, a worker generally has to be ready to work, willing to work, able to work, and looking for work. Next slide, please. So there are two primary federal laws that were passed in response to the COVID emergency. The first one passed last March in 2020, called the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act. And then the law that just passed the end of December and has been the subject of a great deal of drama, the Consolidated Appropriations Act of 2021. These acts made major changes to unemployment rules, and we're going to talk in some detail about those. Now, the Consolidated Appropriations Act of 2021 is still being read and interpreted by many people. It's over 5,500 pages long. I haven't read the whole thing myself because, frankly, my life is finite. But I have read most of the pages involving unemployment benefits, and they build on the rules that were put in place 10 months ago through the CARES Act. But they also make some additional changes, and largely they continue benefits that that basically expired at the end of 2020 otherwise. Next slide, please. So one big thing that the CARES Act did, and the Appropriations Act is continuing, is to create a new unemployment benefit for people who don't qualify for regular unemployment insurance under ordinary rules. And it's called Pandemic Unemployment Assistance. And this is a cash benefit. It doesn't come out of the typical funding for unemployment benefits, which is taxes on employers and state funds. This comes from general revenue. So it's not part of the unemployment insurance program. It is an unemployment benefit fully funded through federal money. And this is for people who don't qualify for unemployment under the ordinary unemployment rules. To qualify for it, you have to be unemployed, partially unemployed, or unable or unavailable to work for any of about 10 reasons that are specific to COVID-19. It can be your workplace is closed because of the pandemic. You've been diagnosed with COVID, or you've been told you have to quarantine, you have to stay home to take care of your kids or your adult family member who's unable to go to a vocational program, for example. You had to quit a job for reasons related to your health. You'd have to have a really good reason why continuing to go to the workplace would jeopardize your health, and why your risk of serious complications from COVID would be particularly high, things like that. Next slide, please. So who can get it? These are the workers who can get pandemic unemployment assistance who don't qualify for ordinary unemployment insurance benefits. The big one is self-employed people. So this includes people with a regular business, independent contractors who may be similar to employees but are not on the regular payroll, don't have taxes taken out of their pay. They're still considered to be self-employed, freelancers, and even gig workers, people doing Uber or Lyft or one of the grocery delivery services, etc. People who are seeking part-time work rather than full-time work in, I believe, 27 states to qualify for regular unemployment benefits, you have to be working, have to have worked and be seeking full-time work. So this can work for part-timers. People who don't have enough work history, haven't worked long enough to qualify for unemployment benefits under the regular rules, and people who don't qualify for regular unemployment for other reasons. Next slide. So here's who's not eligible for pandemic unemployment assistance. People who are able to telework for full pay, even though they ordinarily would be working in a workplace. If you can do the same amount of work at the same pay working at home, then you're not eligible for pandemic unemployment assistance. And frankly, that's fair. That makes sense. Also, you're not eligible if you're getting paid leave that's equal to your regular pay. Now, people have asked me, well, what if your work has been greatly cut back? Your work hours and your pay is much less than it was before the pandemic, and you're teleworking. Could you get pandemic unemployment assistance then? And the answer is yes, you can, because one of the criteria was you have to be unemployed or partially unemployed due to the pandemic. So that would be an example of partial unemployment. Also, if you're getting paid leave and then your paid leave runs out, you could qualify for pandemic unemployment assistance then. Next slide. So what does pandemic unemployment assistance provide you with? It gives you a cash benefit that is at least half of the average regular unemployment benefit in your state. Plus, from the week that started just before New Year's until as late as March 14th, it provides an extra $300 per week on top of that. Now, many people will get more than half of the average unemployment benefit for their state, plus the extra $300, if they've had significant earnings from employment or self-employment, generally in the past year or two. So people can get more, but they must get, if they qualify for it, at least half of the average benefit for the state, the regular unemployment benefit, plus the extra $300 through the middle of March. Now, pandemic unemployment assistance lasts up to 50 weeks, and that was originally 39 weeks under the CARES Act in 2020, and the Appropriations Act added an extra 11 weeks for a total of 50 weeks. But at this point, until additional coronavirus legislation passes at the federal level, the program will end March 14th. Now, some people may be able to continue to get benefits a little bit longer if they've been getting partial benefits. For example, if they've been doing a little bit of work and their earnings have reduced the amount of pandemic unemployment assistance they're getting, that means that they'll have not used up their full allotment, and they could continue to get benefits through as late as April 10th or 11th, those partial benefits. But basically, if you're getting full benefits, the program ends at this point no later than March 14th. Next slide. The second program that was created by the CARES Act and is continuing as a result of the Appropriations Act is called Federal Pandemic Unemployment Compensation. And this is just a pet peeve I have about names of government benefits. We've got pandemic unemployment assistance. This one's called Federal Pandemic Unemployment Compensation. And the third one we'll talk about in a moment has another name that's remarkably similar. I think this is rule number one for bureaucrats trying to confuse the public, is give very different benefits, very similar names. Very difficult to keep track of them. But leaving the name of the benefit aside, what I'll tell you is that this benefit is important because this one provides an extra $300 a week cash benefit from the end of December through March 14th for people who qualify for other kinds of unemployment benefits besides pandemic unemployment assistance, like regular unemployment benefits. People who get pandemic unemployment assistance get this extra $300 a week built into their benefit as well. Okay, so this means basically everybody getting unemployment is going to get an extra $300 a week through the middle of March. Next slide. And here's the third benefit that was created: pandemic emergency unemployment compensation. And this is a benefit for people who have been receiving regular unemployment insurance benefits, but they used up their full period of benefits. The amount of the length of time you can get benefits differs from state to state. A typical amount is 6 months, but that's less in some states, more in others. What pandemic emergency unemployment compensation does is add some extra weeks onto that benefit. So people who've been getting regular unemployment benefits can get those benefits longer with federal funding. And it provides up to 24 extra weeks of benefits. In 2020, the CARES Act had provided an extra 13 weeks, and the Appropriations Act adds an extra 11 weeks onto that. And these benefits will end no later than April 5th of this year. Okay. I'm going to pause for a moment just to see if there are any questions in the chat so far. Do we have anything?
I don't see anything.
Nothing yet. Okay. Okay, then we'll go on to the next slide. And the fourth new benefit, this one was just created by the Appropriations Act, is called Mixed Earner Unemployment Compensation. This was just sort of filling a gap that the CARES Act missed. Basically, this is for workers who have been receiving both wages through employment and self-employment income as well. The people who are working for someone else as an employee and who are self-employed as well. Now, when the amount of their unemployment benefit was calculated, for a lot of those workers, their self-employment income was not factored into the calculation, and they got a somewhat lower unemployment benefit as a result. What this benefit does is give those workers an extra $100 a week added on to the extra $300 a week that we already discussed if they've been getting an unemployment benefit that only factored in their wages and not their self-employment income. Okay. And it's got the same time frame as the federal pandemic unemployment compensation, the extra $300 a week. So it will only last through March 14th. But this is an optional program. Each state decides whether or not they want to offer this benefit. Next slide. So how does a person apply for unemployment benefits? They need to go to their own state's unemployment website to find that out and to go ahead and apply. And I think probably all states at this point have an option to apply online. The link on this slide will connect you with information for all states' unemployment systems, and you can click on your own state and people can apply. So when people apply, and they eventually get benefits, there's something really important to note, and that is you have to continue to apply. You have to go through something called recertification in order to continue your benefits. And in most states, you have to do that every week. In some states, it's every 2 weeks. So basically, the state is checking up on you very frequently to make sure you're still eligible. You haven't gone back to work full time, for example, etc. So you go through these recertifications, generally online, every week, and in some states, every 2 weeks. That's what you need to do to keep your benefits. If you miss a week to recertify, you won't get your benefit that week, although you can go back and recertify later and get the benefit again. Next slide. So, very important thing to note about unemployment benefits is that all of these benefits are taxable. So people are getting this taxable income. It's not like getting your paycheck where your employer is taking taxes out of your pay, is withholding taxes. So there are two ways you can deal with this. The way I don't recommend is to just collect your full unemployment benefits as they come in, and then hope that at the end of the year, you'll have enough money to pay the taxes you owe on those benefits. Not a real smart strategy. The other option is you can ask the state unemployment system to deduct taxes from your unemployment benefits so that you won't be stuck with an unaffordable tax bill at the end of the year. And obviously, that's the way I recommend. So people can, when they apply for unemployment or later, can request through the system that they have taxes taken out of their unemployment benefits. Definitely a good move. Next slide. So I wanted to talk a little bit about how unemployment benefits interact with benefits from Social Security that people with disabilities get. We'll start with SSI, Supplemental Security Income, and then we'll talk about Social Security Disability Insurance, also known as SSDI. And we'll talk about the medical benefits that come with each of those cash benefits. SSI comes along with Medicaid in most states. So if a person qualifies for SSI and they get unemployment benefits, the unemployment benefits are counted as what the SSI program calls unearned income. And that will reduce the SSI benefit almost dollar for dollar. They count all but $20 a month of unemployment or other unearned income against the SSI benefit. So that means if you're getting any decent amount of unemployment, your unemployment benefit will be high enough that it will reduce your SSI to zero. And a lot of people think, well, that's okay. I'm going to be getting more money with unemployment than I would with SSI, so I don't mind the SSI stopping. But a lot of people are a lot more concerned about their medical benefit. What happens if your SSI stops because of unemployment? What happens to your Medicaid? People rely on Medicaid. It's essential not only for medical needs, but for many individuals. It also pays for support services, independent living services, employment services that people need. So people can't go without Medicaid. But I have good news that even if your SSI stops, your Medicaid can continue until at least the end of the pandemic emergency. I'm going to go ahead to the next slide. I'll give a little bit more detail about that rule. So I've put this in bold because it's a really important protection. There is a special federal rule that was initiated by yet another federal pandemic law called the Families First Coronavirus Response Act that provides Medicaid protection during the pandemic emergency. This rule, which applies to every state, I believe, every state decided to participate in the extra federal money that the feds are giving for Medicaid, and they're bound by this rule, every state. This rule says if a person is getting Medicaid at any point during the pandemic emergency, which started officially the end of January 2020 and is still continuing, then the state has to continue Medicaid for that person, even if they're no longer eligible for Medicaid, until the last day of the month when the pandemic emergency is officially lifted. Okay, And this is true not just for people who lose SSI because of unemployment. This is true for anybody getting Medicaid in any state. If they lose eligibility for Medicaid during a pandemic emergency, the state has to continue their Medicaid anyway until the last day of the month when the emergency is officially lifted. Okay, so very important. Now, some people may lose eligibility for Medicaid during the pandemic emergency, and they might be dreading the end of the emergency because they fear that they'll lose Medicaid then. But there are many different ways to qualify for Medicaid. And sometimes, even though people's Medicaid may be protected through this special rule during the pandemic emergency, they may qualify for Medicaid another way so that they won't lose Medicaid when the pandemic emergency ends. One good way is called a Medicaid buy-in program. There are 45 or 46 states that have Medicaid buy-in programs. This is a way for people to qualify for Medicaid if they have a significant disability and they're working for pay and meet a few other conditions. So many people who might lose eligibility for Medicaid in other ways, if they're working and they have a disability, may qualify for Medicaid through their state's Medicaid buy-in program. Next slide. Okay, and let's talk about interaction of SSDI and Medicare with unemployment benefits. And then I think I'll take another pause just to see if there are any questions. So this one's easy. Unemployment benefits have no impact on SSDI or Medicare. So a person can be getting full unemployment benefits. They can be getting full SSDI benefits at the same time if they're eligible for both. And there's only one state that I'm aware of in which a person who gets SSDI and unemployment benefits will have their unemployment benefits reduced by their SSDI, and that's Minnesota, which is very surprising because Minnesota is an extraordinarily generous state with public benefits generally. But in every other state, if you're eligible for both unemployment benefits and SSDI, you can get both full benefits at the same time. Next slide. Okay, so since you can keep your full SSDI benefit while getting unemployment benefits, and along with SSDI, people get Medicare after a 2-year waiting period, this means Medicare eligibility can also continue. As long as you keep SSDI, you keep Medicare. And in fact, there are also protections for people who've worked their way off SSDI to keep Medicare, but that's for a different training. Now, I did want to mention one thing. Sometimes when a person who gets SSDI applies for unemployment benefits, someone who's not well informed within the state's unemployment system might review their claim and say, oh, you're not eligible for unemployment benefits because you're getting SSDI, and that means you're not able to work. And remember, one of the criteria to be eligible for unemployment benefits is that you have to be ready, willing, and able to work. But this is not the case. If you have worked in the past, you're eligible for unemployment benefits based on your past work and your current unemployment, you can receive unemployment benefits even if you're also eligible for SSDI. So a person who's denied unemployment because the state says, oh, you're not able to work because you get SSDI, that person should appeal. Okay, and next slide. Okay, I'm going to pause here. Any questions so far?
Yeah, we have two questions.
Okay, great.
The first one is from Laura, who wants to know, as a CPWIC, how would you recommend suggesting to clients that they have taxes taken out? I have several clients that choose to have their whole check now. I cannot tell them what to do and I'm assuming she means have not yet been able to get them to understand. Thank you.
Okay, great. Yeah, now this should be addressed in each state's unemployment insurance system. And, and as I said, I believe all states now have online systems for applying for benefits, also called filing a claim, and for doing those weekly or biweekly recertifications. And that system should show the option for having taxes taken out. And I can't swear that this is true in every state, but I know that in at least some states, if you don't request to have taxes taken out when you initially apply, when you initially file your claim, but you decide later, oh, I better start having taxes taken out so I don't end up with a big tax bill I can't afford at the end of the year. I believe most states offer the option when you're going through recertification of being able to ask to have taxes taken out then, later. So unfortunately, Laura, I can't give you a definitive across the board answer. It's going to differ from one state to the next. Now, I hadn't mentioned another option, which is contacting, emailing, or calling an unemployment benefits representative within the state, which is certainly another option, particularly if it's not clear from the online system how you get taxes taken out. I hadn't mentioned that yet just because those systems are so overwhelmed. It's really hard to get through, especially by phone. It's hard to get emails responded to because the unemployment systems are just so overwhelmed and are now gearing up for this new round of unemployment benefits for 2021. And they've been hiring new workers, many of whom are not that knowledgeable or experienced. So it's tough right now. But, some people who just can't get the information they need online do call and email and persist until they get answers. But the answer is really going to differ from state to state. Okay, and I think there might be two more questions now. Dallas?
Oh yeah, this next one is from Pamela, who says, since this information is new to me as a provider, how far back can someone go back? How far back can someone go back to apply for unemployment benefits? For example, a person has been employed since March and has never applied for unemployment benefits.
Yes, excellent question. My understanding is that people can go back and apply retroactively for these benefits if they have been eligible for a period of time. I do know some people who've done that successfully. And I do encourage that people, if they've been eligible and they just didn't realize they qualified for unemployment benefits, that they go ahead and apply and ask to do that retroactively. I have a family member who did that, who's waiting to be awarded benefits now. So yes, they should do it. Now, again, that's a state-by-state question. You have to look at what the state system does to enable people to apply retroactively. But I know that at least in some states, perhaps all, a person can apply for benefits retroactively. So thank you. Good question, Pamela. And is there one more, Dallas?
Yeah, I think this is Laura is asking a follow-up to her previous question. She says, how would you suggest to a client to have their taxes taken out now? I'm assuming she means like convincing them to do so.
Oh, okay. I see. I'm sorry. I misunderstood your question from earlier, Laura. Okay. Okay. Yes. Thank you for that clarification, Dallas and Laura. So how can you persuade somebody to choose to have taxes taken out of their unemployment benefit if they otherwise want to just keep the full benefit. I think the best thing to do is just to compare the two different options. You can tell them, well, one thing you can do is receive the full unemployment benefit, but at the end of the year, you'll have to pay taxes on it. Now, if you expect you're likely to spend all that money when you receive it and not save money to pay for taxes, at the end of the year, you will owe money for taxes and you won't have the money to pay it. And that means the IRS and your state income tax system will still require you to pay those taxes. And if you pay them late or don't pay them at all, you'll also have penalties. You'll have to pay interest on the tax you owe, and you'll have to pay penalties on top of that. And those interest and penalties grow over time. So if it's going to be a long time before you can afford to pay those taxes back, you'll not only owe the taxes, but also extra amounts for interest and penalties that will grow the longer you don't pay back your tax bill. So that's one option. The other option is to have taxes taken out of your unemployment benefit as you go along. Then you're receiving less money in the short term, but at the end of the year, you won't owe a big tax bill that you can't afford and that will cause your debt to grow each month you don't repay it in the form of interest and penalties. I think that's the best you can do. And I hope that most people will listen to that and think, well, it's going to save me money in the long run, even though I'll get less in the short run. It's certainly going to save me money in the long run to have taxes taken out as I go along. Does that answer your question, Laura? Okay, you're welcome. Thank you. It's a good question. All right, so we're going to move on from unemployment benefits and talk about SSDI and SSI. Suppose an individual had been receiving SSDI benefits and they worked and earned enough money for a long enough time that their SSDI benefits stopped. But now they're unemployed or partially unemployed as a result of the pandemic. Can they get their SSDI benefits restarted? Generally, they can. And in many cases, they may be able to take advantage of safety nets called work incentives that will enable them to get their SSDI restarted without having to reapply and start all over and wait a long time to get benefits back. What they can do is contact their local Social Security office, and the little URL within the parentheses on this slide is a search field that lets a person enter their zip code, and it gives them contact information for the local Social Security office that serves their zip code. And they can ask if their SSDI can be restarted through either of two safety nets or work incentives. One is called the Extended Period of Eligibility, and the other is called Expedited Reinstatement. And I'm not going to go into detail about these, but what I'll simply say is these are work incentives that apply to people whose SSDI has stopped due to work, and then who later stop work or have their earnings drop low enough that they could qualify for SSDI payments again. Now, something I just realized I did not include in this PowerPoint, but I'm going to add a slide, and we'll email this to all of you. I wanted to mention a way that somebody can get assistance dealing with SSDI, SSI, and work issues from a certified benefits planner. And that's by calling the Ticket to Work helpline and being connected with a program called Work Incentives Planning and Assistance, or WIPA, W-I-P-A for short, if they don't have access to a certified benefits planner in some other way. So when somebody wants to get their SSDI restarted, for example, if they call Social Security and they're not getting helpful information, or they feel they're getting misinformation, or if they simply want to get help even before contacting Social Security, they can get that from a certified benefits planner at no cost to the person. Okay, next slide, please. So suppose the person does not have either of those work incentives available to get their SSDI back without reapplying, or suppose they've never received SSDI and now they're unemployed and they want to apply because they need all the income they can get to make up for the lost earnings. Well, they can apply online using the link on this slide, or they can call Social Security's national toll-free number, 800-772-1213, to schedule an appointment to apply by phone. And there are a lot of people who are applying for SSDI right now because they are unemployed and they have a disability. Next slide, please. What about restarting SSI? Suppose a person's been working, they had their SSI stopped due to their earnings, and now their earnings have greatly reduced or stopped. Can they get their SSI restarted? And the answer is, for most people who had been getting SSI and worked their way off it, they absolutely can get their SSI restarted quickly and easily without having to reapply. There's a wonderful safety net, a work incentive, that's known as 1619B. And this rule says, if your earnings increase high enough to reduce your SSI payments to zero, you still remain eligible for SSI if you meet all the other SSI eligibility criteria aside from earned income. And if you remain eligible for SSI, that does two things. It lets you keep your Medicaid, even though your SSI has stopped, and it lets you get your SSI payments restarted if your earnings later drop low enough or stop. And you can contact your local Social Security office to get your SSI restarted through that 1619B rule. And I think there might be a new question, Dallas.
It's not a question, but it is a comment. Are you okay
Oh.
with me reading a comment? It's from Pam. She says they can also contact their local nonprofits and ask if they have a benefits specialist who is certified, as we have received the same training as CWICs as CPWICs. We just aren't attached to a WIPA program.
Yes, and Pam, thank you. I kind of alluded to that quickly, but didn't stress it enough. Thank you. Yes, Pam has used the acronym CPWIC, which stands for Community Partner Work Incentives Coordinator. These are also certified benefits planners who've received the same training and certification as the benefits planners who can provide free benefits planning through the WIPA, Work Incentives Planning and Assistance organizations. They just simply don't work for WIPA agencies. So if you're getting employment supports from an agency and you would like benefits planning, you can ask if the agency has any certified benefits planners on staff. So thank you, Pam. Good point. Next slide, please. So if you haven't received SSI before, so you can't get it restarted, but you'd like to apply, you can apply the same way you would for SSDI, either online, using the link on this slide, or by calling that same national toll-free number. And a person, if they apply for SSI, will be considered for SSDI as well. To be eligible for SSDI, you have to have had a certain work history, or in some cases have a parent who is retired, disabled, or deceased who's had a work history, or have a deceased spouse who's had a work history. And if you apply for SSI, Social Security will check to see if you may be eligible for SSDI instead. And so applying for SSI is essentially the same as applying for SSDI at the same time. So next slide. All right, so these economic impact payments, which are generally colloquially known as stimulus payments, those were received by most people in 2020, and the Appropriations Act is adding a new round of these economic impact payments, although they're lower than the ones that we received in 2020. Most people will be getting $600 per adult. For married couples, it's $1,200 per couple. And then there's an extra $600 for each dependent child under age 17. Next slide. So people are generally going to get these payments without having to do anything, without having to take any action. People will get them either through direct deposit or by check, and these payments are already being distributed. You can check the status of your payment by going to this link on this slide on the IRS website. Last I checked, it wasn't up and running yet. It may be by now. And last year, there was a lot of drama about these payments. Some people had to take action to request the payments, depending on their circumstances. Those details haven't been worked out yet, so I'm not really addressing them here. But most people will get these payments without having to do anything. Next slide. So to be eligible for the payments, you have to be a U.S. citizen or a resident alien, have a valid Social Security number. You couldn't be claimed as a dependent on someone else's taxes, and you have to have adjusted gross income below certain limits. To get a full payment, if you're an individual, you're not married, you have to have adjusted gross income under $75,000. For a married couple, the adjusted gross income has to be under $150,000. And for a head of household, that would be a single person who's got dependents, has to be under $112,500. This is per year. If your income is a bit above those amounts, you may be able to receive a partial payment. Next slide. So how do these economic impact payments affect other benefits? They're treated as tax refunds. They are not counted as income at all for any federally funded program that's based on financial need. And that includes SSI, Medicaid, SNAP, which stands for Supplemental Nutrition Assistance Program. That's the other name for what used to be called food stamps. Frankly, I can't call it SNAP because where I live, SNAP stands for Spay and Neuter All Pets, but that's another story. Programs, housing programs, rental assistance programs funded by HUD, the Federal Department of Housing and Urban Development, temporary assistance to needy families, pensions from the Department of Veterans Affairs, and others. So economic impact payments will not count as income for any of those benefits, and those payments won't count as resources. They won't count against the resource or asset limits for programs that have resource limits for 12 months after they've been received. And I think it's a safe bet that probably everybody getting a $600 payment is going to have spent it all within 12 months. And as a result, the economic impact payments won't have any impact on any of these federally funded benefits. Next slide. Another good bit of good news about the economic impact payments is that they are not taxable. Next slide. So that's the end of the portion of this presentation where we're talking about benefits. But I wanted to give some more information about things like how people can avoid losing their homes, how they can deal with bills they can't afford, how they might be able to alleviate the impact of unpaid bills on their credit and some other issues like that. I'm going to go through these rather quickly. So your income has dropped due to unemployment or partial unemployment resulting from COVID. You're afraid of losing your home. Do you have any protections? And the answer is yes. Last year in the fall, the Centers for Disease Control instituted a moratorium on evictions, on people paying rent from being evicted from their homes if they met certain conditions. And that moratorium has been extended through the end of this month, which is not great comfort for people who don't expect their income to resume by the end of the month. But I'm hoping that, that another COVID bill will pass that can address this. And to qualify for that moratorium, people have to have been trying to make payments, at least partial payments, if they could, made good faith efforts to do that. They have to contact their landlord. They have to be unable to make full payments for due to economic hardship related to COVID. They have to certify all of this with their state. Now, the Appropriations Act did add a $25 million appropriation for rental assistance that's being distributed to the states. The states will give it out to households that are in need, and they can use that rental assistance to pay their rent, including back rent, for up to 12 or 15 months. Now, that 25 million is not going to be enough for everybody, but it may be helpful. And for more information about legal protections and rental assistance, there's a link on this slide. Next slide, please. There are also protections for homeowners who can't afford their mortgages. Homeowners with certain mortgages that are federally assisted can't be foreclosed on until after certain dates. If there are mortgages through Fannie Mae or Freddie Mac, can't be foreclosed until February. And for other federally backed mortgages, they can't be foreclosed until March at this point. Again, hoping future COVID bills will address this farther. Also, people having financial hardship due to COVID can ask for mortgage forbearance. This means temporary pauses in their mortgage payments or reductions in the mortgage payment amounts they have to pay for up to 180 days with a possible 180-day extension. Next slide. And to request forbearance with your mortgage, you do have to contact the mortgage servicer. Next slide. And more information about help avoiding eviction or foreclosure is available on the consumer, the CFDC, Consumer Financial Development, CFPB, excuse me, Consumer Financial Protection Bureau. on their website, and the link is here on this slide. Next slide. So what happens if you fall behind on your debts during the pandemic? Well, you should contact your creditors. Don't just hope that they'll miss the fact that you're not making payments, and tell them you're having a hardship. You may qualify for a hardship program called an accommodation that can temporarily delay payments or adjust them downward, or offer longer-term repayment plans with lower interest rates. And there's some tools on the CFPB website to help when you're unable to pay your bills. That's linked on this slide. Next slide. Good news about people with student loans. Monthly payments and interest on federally held student loans have been suspended at least through the end of January so far. More information at the link here. And I think we're down to one more slide. Yeah, protecting your credit. So if you've been unable to make full payments on your debts, this ordinarily would affect your credit. But what you can do is contact your creditors, let them know about the problems you're having, because you're in company with tens of millions of other Americans. They may be able to qualify you for some relief from having those debts, those past due debts, affect your credit. And once again, there's a link here to more information. And I believe that's the last slide. Is that right? Yeah, just any questions? Okay, well, it looks like we are at the top of the hour, and I thank you all for participating. Have a nice weekend. Oh, we've got a question here. How does one become a certified benefits planner? I'll tell you what, if you can email me, I will get in touch with you with information about that. And my email is mdalto, M-D-A-L-T-O, at Griffin-Hammis, Griffin-Hammis.com. Okay, and any other final questions, comments? All right, thank you. Thank you, everyone.